Let's take a look at what's going on with Dogecoin today, guys. All right, so we have a few things to talk about. I haven't made a video in a couple days, but I'm looking at this falling wedge right here. Something like that. We have resistance, resistance not perfect, and resistance right there. We have support, support not perfect right there either, and support right here. Basically looking at this resistance line and this support line, we're bouncing in between those two lines right there, and we're waiting for a breakout to the upside. It's possible it goes to the downside, but in a falling wedge, this is technically a bullish pattern. Hopefully we can break up, and like I was talking about in the last videos, I'm hoping that we could come up somewhere over here. We had to adjust this line right here because, let's see, originally it was probably something more like this. Let's see, because I was saying like it wasn't perfect. I was originally looking at this support, this resistance, and this resistance. And we broke above the resistance right here. We also broke below the support. And in my last couple videos, I was saying my target or my limit orders were set at .185. We came down. Let's go to like the 4-hour time frame or something. We have a lot to talk about, so strap in. But we came down. We hit .185 perfectly, pretty much right there. My limit order, my target. We got a bounce to the upside. In my last video, I was also watching this resistance right here, resistance, 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 and we broke that resistance going to the upside. I said it kind of looks like an inverse head and shoulders, in my opinion. So in that case, we would drag from the bottom to the top of the head and shoulders, or the head and the neckline, drag that to the breakout, and that gives us that target right here that we talked about in last video. I was wondering, since we hit that target, is this it and we're going to start going down? And that's basically what happened. I was also watching, let's go ahead and start cleaning some of this stuff up though. I know I'm going to be bouncing around, but we had this trend line like this. We broke that trend line going to the downside. Ever since then, or once we broke that trend line, then I started looking at .185 again. I didn't trade this, but we came down, hit that Fibonacci retracement level again, .185, almost hit it right here. I don't think it quite hit it, but went up a little bit, came down, and actually hit it again. Ever since then, we've been trending up, and this is what's kind of happening right now. So let's go ahead and delete this one because we filled that, we completed that target, we broke this trend line, and now we're looking at, let's go ahead and delete these ones just for now. I'll go back to that falling wedge here in a second. I just want to kind of focus on what's happening right now for a second, and then we'll go back to the daily time frame. I'm on the 4-hour time frame right now. We could probably even go to the, let's see what the 1 hour looks like real quick. Glitch in the matrix. Hold on. Oh, there it goes. Okay, so we're on the 1 hour time frame right now. We have support, 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 giving me this uptrend right here. Technically, we are in a smaller uptrend on the smaller time frames, bouncing on this trend line. If we break this trend line going to the downside, I'll probably be looking at 185 again. Yeah, so we were bouncing, kind of starting going sideways right here. I was looking at the top, boom, boom, the bottoms, boom, boom, boom. We had resistance and we had support. We actually broke that resistance going to the upside, got a nice little pop, and now we're still technically trending up because we haven't broke that trend line going to the downside. So that's kind of what's happening in the meantime. Let's go ahead and delete this one, and we'll go ahead and delete that one because we already kind of figured that out. We're still heading up. So what I'm looking at in the shorter time frame is this 1 hour. On the 1 hour time frame is this uptrend going up. As long as we can stay above this uptrend, maybe we continue to push up, and maybe we can come back up to maybe .248. But I'm kind of skeptical on that, and I'll tell you here in a little bit. But yeah, let's go back to the daily time frame and focus on, so we're in an uptrend on the smaller time frame, right? Let's go back to that daily time frame and set up that falling wedge again, something like this. So like I was saying, originally it was like this. Now it popped up and we got resistance right here. We're going to go ahead and readjust this trend line, something like this. And then we're going to go ahead and get that support again. It was something like this, I believe. Let's see. It was, I don't know, maybe we could do something like that. So we're looking at that falling wedge, and let me show you something else. If we zoom out and go into the past, back here when we were in this falling wedge over here last year, it kind of reminds me of what's going on with this, because before, let's see, we had to, originally this falling wedge was something like this, maybe, where we were looking at support. I don't know, basically we broke above that resistance right here in this area, and then got rejected and started heading down, and then we started kind of coming back into this area. Therefore, we readjusted the trend line, something like that, and something like that. Basically, it kind of reminds me of what's going on over here, where we had a big downtrend. We broke it right here, or the original one was something like that. We broke that going to the upside, and then we got rejected and came down, and then went sideways for a while. Once we broke that resistance over here, then that's when we really started taking off. So I'm wondering if we have some more sideways action to go, and or some more adjusting in these trend lines. I had these set up. This doesn't look like the same one I started, but it's okay. So we're I'm still looking at this falling wedge pattern. We had a little breakout to the downside, but we got support on that .185 level, and it looks like we're still holding support on it. Let's see if we can continue to hold support here, and then maybe eventually, I mean, we might have to do some sideways stuff, and then eventually kind of go up like that. That's what I'm kind of hoping right now. Let's take a look at, so this is like kind of one of the main things I'm looking at is the daily time frame, this falling wedge. What we need to do is break this resistance right here, go up, or going up, and then we can start targeting the next Fibonacci retracement levels going to the upside. Like I was saying, my last target was .185 because of the Fibonacci retracement levels, and I got that because we had this big run going to the upside. We started having trouble up here, and I get the Fibonacci retracement tool. I drag from the bottom of that run to the top of the run, and then that gives me those Fibonacci retracement levels. So I took profits up here, and then ever since then I've been dollar cost averaging on these Fibonacci retracement levels. And like I talked about when I first started this, is back last year when we had this Fibonacci retracement chart, or whatever you want to call it, we had a big run up, we started having trouble, and then we started trending down. We actually came all the way almost down to the very bottom, and that's what I don't know, I wasn't sure that was going to happen this time around, or else I would have just not dollar cost averaged on the way down. But it's still possible that we have some room to go down as well. So because it's down here, these are the next spots that I'm looking at to the downside potentially, is .10 cents and around .5 cents, mainly because the monthly daily the monthly 9 moving average, sorry, potentially. I'm not 100% sure on it, but yeah, that's what I'm kind of, this is just kind of on a little bit on my radar right now. These two previous, so this 10 cents is the bottom of this run right here, and then 5 cents is the bottom down here, and we'll talk about that in a second. But let's see, where am I going with this? Okay, so let's look at the moving averages, just so that way we can kind of look at something else. Let's go ahead and delete these trend lines real quick. And right now we are above. Okay, so we have the 9 moving average right here. When we're below the 9 moving average, we get resistance on it, or it's more likely that we're going to get resistance on it and get pushed to the downside. When we break above it, let me find a good example. This is a really good example over here. We broke above that daily 9 moving average. Every time we were coming into contact with it, we're getting support and pushing to the upside. When we break below it, pushing, get resistance on it, resistance, pushes to the downside. Break above it, nice little move. Break above it, nice little move. Break to below it, move to the downside. This one was imperfect right here, kind of went above it, we got a nice little move, but it was kind of small, and then broke back below it. Ever since then, rejected, pushing to the downside. Right here, we broke above it for like 2 seconds. Well, this is the daily time frame, so it was one day above it, the next day crashed below it again. We're now below it. Right here, we technically have broken above it. Let's go ahead and zoom in a little bit. And when this kind of stuff happens, when we break above it and then break back below it, we look at the next time frame. So, and we'll look at that here in a second. But right now, we are above the daily 9 moving average, which could potentially be a good sign. Maybe we can get a nice pump to the upside again. Let's see what happens though. If we go into like the weekly time frame, we have this 9 moving average right here, and same strategy. When we break below the weekly 9 moving, or the 9 moving average in general, no matter what time frame, it's not a good sign. We're getting rejected, rejected, rejected. It's basically a resistance. That line is acting as a resistance. Resistance, 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 resistance. All these weeks. All in this area, we've been below it, pushing us to the downside. And this is kind of more clear. Like I was talking about before, when we break above it, support, pushing us to the upside. When we break below it, resistance, pushing us to the downside. So we are technically below the weekly 9 moving average, and it is pushing us down, which means that we're not in a good position right now, in my opinion. And the other thing is, what I like to see it do is the 9 moving average come down. Maybe if we could go sideways potentially for a while, let the 9 moving average catch up, then break through it going sideways, then we can start getting more bullish, and then it's easier for us to go through the 9 moving average going sideways, as opposed to us trying to go up and break it when it's above us, like directly above us. I'd rather see it come down, maybe us go sideways for a couple more weeks and then go sideways. So in my opinion, I have a feeling that we might be stuck in this area for a little bit longer. Let's take a look at the monthly though. This is the other thing that which makes me look at these bottom levels. And comes back to these levels, the 10.10 cents and 0.5 cents around there, somewhere around there. Because right here, last month on this candle, we broke below the 9 moving average. Let me show you where that 9 moving average is right here, because it might be hard to see. Something like that. Okay, so we broke below the 9 moving average on the monthly time frame and on this candle, and it looks like we're still below that monthly time frame, and it looks like the monthly is kind of heading up like that, as opposed to like trying to come back down. So my point is on the monthly, it does look like we are in a not so great position right here as far as being under the 9 moving average. I'm wondering if we're going to start seeing resistance on that 9 moving average, and that's why I'm looking at these levels going to the downside. I'm wondering if it's going to give us resistance and push us down further. We also have support right here in those two levels, giving me this trend line right here. So we might not have to go all the way down to these ones, but these are just some of the things that I'm kind of looking at and making me wonder if we're going to push down or what's going to happen. Like I was saying, if we could stay in this going on the weekly, let's switch back to the weekly because I was on the monthly just now. If we can stay going sideways and the weekly 9 moving average can come down, then maybe break back above it, then maybe we can break the 9 moving average a little bit more clearly. Then if we can break above that, then maybe we can start getting support on it and start pushing to the upside as well. Like I said, in the smaller time frame though, we are, like if you were looking at that 185 level right here, we got a nice move up. This was like 25% move right there. We hit it, we came down, hit it again, and we're having a nice little move to the upside right now from 0.185 to where we're at right now. Let's see, where is it? Get the ruler tool, drag from the level that you're looking at to where we're at right now, and it's around 13%, which is pretty decent. I kind of wish I would have taken advantage of this little trade right here, but I didn't. I doubt I'll even take advantage of this little trade as well. I don't know, maybe. But I'm looking at this trend line right here. Let's see how far we can push going to the upside for now. In a bear market, it's honestly kind of easier to take profits just because it does seem like we have momentum pushing us to the downside kind of thing, like in general. But I am, like I talked about in the last video, I am trying to kind of in like an accumulation phase more than I am trying to like take profits, because we are at pretty decent levels. 20 cents is a pretty decent level in my opinion. But yeah, so that's kind of some of the things I'm looking at. I think the main thing that I'm really watching, like we have that, let's delete that. We have that uptrend on the 1 hour time frame, but the main thing I'm kind of looking at is the daily time frame and this bigger downtrend, something like that. Like I said, I readjusted it a little bit. I don't know if I was like, I think it was something like this. This is what I think I started the video with, using this support right here. And we're basically bouncing in between these two trend lines. If we could break going to the upside, I'm gonna be looking at like .339 or maybe even .3394, because that is technically the top of this falling wedge. Basically though, the other thing with these Fibonacci retracement levels is they act as support and sometimes they act as resistance. Right here we didn't go all the way up, but we came very close to it, and then that's where we got that resistance. So you can use these levels as support and resistance. If we can hold support and start pushing up, the next spot that I'm looking at, or next spot that I'm targeting, is the next Fibonacci retracement level going to the upside. So we held support right here. If we can continue going up, the next spot that I'd be looking at is .248. But if we break out of this pattern, then I'd be looking at even higher, maybe something like that. Like I said, a falling wedge, something like that, once we break that resistance, is a bullish pattern, and technically the tops or the previous resistances are the next targets on just the patterns. When we're looking at the Fibonacci retracement levels, the Fibonacci retracement levels are the next targets. Same thing going down. If we break this .185 going to the downside, the next spot that I'll be looking at is .10 or 10 cents, should I say. But we are holding support for now. Let's see if we can continue to hold this support and push to the upside. What I really want to see us do is break that resistance. I'm kind of skeptical in general just because we've been having such downward movement. I'm wondering if it's going to take a while for us to like just come down and just go sideways for a while and then get that pop up, kind of like we did here. So like I said, we had this trend line, we broke it going to the upside, got rejected and started heading down, and then we went sideways for a while. Once we readjusted that trend line, like, okay, so it was before, it was something like this, we broke it. Once we readjusted it, then we got another resistance. So we had resistance, we got another little resistance right there. We went sideways for a while. Once we broke that, then that's when we really started to take off. This right here took a while though, so I'm wondering if that's what we're kind of looking at right now, is where we had to readjust right here. We might even have to readjust again. Let's see, it pops up like that and then it starts coming down. We might even have to readjust again, something like that, or even start looking at something like that. But I'm still kind of keeping my eye on this, on the daily time frame, on this falling wedge pattern. That's what I'm looking at. That's basically it though. Like I said, on the 1 hour time frame, if you want to just do in the short term, then we have this uptrend right here. If we break that uptrend going to the downside, something like that, then I'll be looking at this .185 level again. I don't know if I'll trade on it, but if this would be probably the next spot that I'd be wanting to buy, because we are kind of in a, it seems like we're almost like in a bear market. I looked it up on ChatGPT, like I talked about it last time. It said if you go down 50% from the top, then you're in a bear market. And from the top here, we're around, I mean, .185 was around 61% down. Right now we're at 56% down from the top. And so yeah, in my opinion, it does seem like we're in a bearish market, but all we have to do is just break that resistance for things to change. However, like I talked about, we might have some more sideways action. We might have to go down a little bit more. We might have some more sideways action before we can go up. Maybe even we get even more bearish and come down to 5 cents. I'm not 100% sure on it. Like I said, I've been dollar cost averaging at these Fibonacci retracement levels, and I'm just kind of buying and holding for right now. Let's see if we can come down and hit these ones next. I don't know. I think the thing that's going to be telling is if we can hold support at 185, stay here, go sideways for a while. Let's go back to the weekly. Like I was talking about, if we go sideways for a while, let the 9 moving average catch up with us and then go sideways. Let me go back to the weekly though. I'm on the 1 hour still right now. Something like this. Okay, so we have the weekly 9 moving average. Let's see if we can. I'm wondering if we're gonna have to go sideways, let the 9 moving average catch up with us, then go sideways, break through it going sideways, break through the 9 moving average going sideways, then we can start looking at these higher levels up here. Until then, I'm gonna just be trying to accumulate when I can, but that's just what I'm doing. Let me know what you guys are thinking though. If you guys like this video, hit that thumbs up. If you want to watch the last video, check it out right here. If you're new to trading, check out this playlist right here. It'll help get you started with TradingView. All right, I'll see you guys in the next one.